Okay, welcome back to the channel, guys. Today we've got a very special trading psychology lecture. We're going to be discussing how to have certainty in an uncertain market. And you've heard it over and over that the markets are uncertain. How can we make money in an uncertain market, etc., etc. I want to offer a slightly different perspective on this because personally, I don't think the markets are uncertain. And personally, I think there are ways or mental models you can put in place to ensure that you have certainty as a trader to go off and make money in the markets. I'm going to be sharing a very interesting story shortly, which I think will be incredibly useful for this particular lecture and will offer you a lot of insights. Now, very quickly, if you're checking into the channel for the first time, welcome. My name is Pat Bayluni and I'm the founder of Master Your Trading Mindset, which is an education and performance coaching business. And we work with retail and institutional traders all around the world, helping them overcome the psychological challenges they have in the markets and helping them achieve funding goals. If it's the first time checking into the channel, make sure you go into the description below and check out the free Bulletproof Your Mindset tool. Get that, that'll be extremely useful for your journey, and make sure you have that and make sure you use that tool because that's going to tie into a lot of the things and it's going to help resolve a lot of the trading mindset challenges you have. Now, there was a very interesting discussion I had with an individual who at the time was managing $98 million of capital. So a very accomplished individual, was in the investments field. And we were in his ute driving towards we're going out for lunch for some drinks. And we were having a discussion about trading and the markets and all that type of stuff. And we're talking about probabilities. And I said something along the lines of, the markets are uncertain and it's a probabilistic game. And he stopped me and he corrected me and he said that he doesn't think that the markets are uncertain. He doesn't think that the markets, like I said, are uncertain. Probability is just something we put there because we can't truly understand the uncertainty in the market. And what he was saying was along the lines of that probability, we just created probabilities and we created this whole idea or this belief system around uncertainty because we don't yet have the tools and the understandings to find certainty in the market and to truly understand the market. So we just put probability there as a blanket term to help us deal with what we think is an uncertain market. But if you really dig deep, you have certainty there. Now, I think humans' understanding is still evolving and we're not quite at the level where we can truly pinpoint certainty in the market and predict the market with pure certainty because it encapsulates so many different people's decision making. However, what he was saying, he was more so being a devil's advocate. And he really opened my mind in that moment to realize, hold on, you know what, you're right. We're told to believe that the market's uncertain. And we're told to believe that the markets just works on probability, but is there a deeper understanding that we can have than just that? And can we really question that belief and can we put that belief under a microscope and dig deeper to maybe have more certainty of the market and understand the market from a different perspective? So what I'm going to present with you today is my ideas and my theories on how you can create certainty in an uncertain market. And by the way, we had that conversation a very long time ago, it was a few years ago. And it was before I did a lot of my in-depth studies on human psychology and the brain and what certainty actually means. And I came to, from my learnings, create and synthesize some ideas that now I pass on to my students, my clients, to help them ensure that they have certainty in an uncertain market. And as you're going to learn in this particular psychology lecture, it's all about coming back to your expectations. And it's about putting a slightly different mental model in your mind before you go into the markets and you'll find yourself having certainty in the markets. So a long introduction, but let's get into it. Is the market predictable? This is really the question we want to put forward. How can you have certainty in the market? How can we have a level of predictability? Now, I believe that the market is predictable and certain, but it's only predictable and certain when you have balanced and realistic expectations on the market. And I'm going to elaborate on this a little bit more. It's our unrealistic one-sided expectations that lead to uncertainty in the market. Okay, let's imagine, and this is a particular analogy that I've heard one of my mentors, whatever you want to call them, use, and I think it's brilliant. Imagine someone came up to you and said that you're always positive, you're always up, you're always happy, you're always nice, and you're always supportive, and you're always happy, never sad, you're always nice, never mean, always up, never down, always supportive, never challenging, always nice, never mean. And whenever we use these extreme labels of always and never, if I said that to you right now, you'd probably say, no, that's not true, right? That you have an intuitive BS meter that goes off, and you realize that, you know what, that's not true. I'm not always happy. I'm not always up. Sometimes I'm sad. Sometimes I'm down. Sometimes I'm mean. And so too, if I came up to you and I said that you're always mean, never nice, always negative, never positive, always challenging, never supportive, always down, never up, again, you wouldn't have certainty in those situations. You would say, you know what, sometimes I'm the other side. But if I came up to you and I said, sometimes you're nice, sometimes you're mean, sometimes you're happy, sometimes you're sad, sometimes you're supportive, sometimes you're challenging, sometimes you're up, sometimes you win, sometimes you're up, sometimes you're down, sometimes you win, sometimes you lose, you can have a sense of certainty to that. You say, yeah, I am sometimes happy, sometimes sad. We have certainty towards balanced, two-sided expectations and beliefs. So what I'm trying to communicate here is that I believe that every trader can have certainty in their trading and certainty in the uncertain probabilistic market of model of the market, but you have to have realistic expectations on yourself and on the market as a trader, okay? So if we're going into the market saying that the market always brings me profit, right? It never brings me losses. Me as a trader, I'm always winning, never losing. These are these one-sided, unrealistic expectations we have as a trader, and going into the market, we can't be certain of that, right? But if we have an expectation on ourselves as a trader that sometimes we win, sometimes we lose. Sometimes we make money, sometimes we don't make money. Sometimes the market goes up, sometimes the market goes down. Sometimes the market provides opportunities, sometimes it doesn't. Then we have realistic, balanced, two-sided expectations going into the market and on ourselves as a trader. And guess what? You can be certain in those situations. You can be certain that as a trader, you're going to make money and you're going to lose money. You're going to win and sometimes you're going to lose. So having certainty in an uncertain, unpredictable, probabilistic model comes down to having balanced, realistic expectations on yourself and on the market as a trader. Hope that makes sense. So certainty, from a human behavior perspective, like I just broke down, you can only have certainty when you have balanced expectations. You can be certain that sometimes you're nice, sometimes you're mean. When someone comes up to you and says how lovely you look and how amazing your new haircut looks and all these nice things, you're going to be nice to that person. You're going to reciprocate by being nice because they've supported your priorities and what's important to your values. But if someone comes up to you and says you look absolutely disgraceful today, then and they challenge your values in that moment, you're going to be an asshole back to them. That's just how human behavior works. So depending on whether your values are supported or challenged, we're going to exhibit certain behaviors in response. So to say that we're always one-sided is just not true. It's not the reality, and we can't have certainty to that. We intuitively know that's not true. But to say that we're two-sided and we have both sides, we can have certainty to that, and we intuitively know that's true as an individual. So always positive, always up, always supportive, always nice just doesn't exist. Always negative, always down, always challenging, always mean doesn't exist either. But having sometimes positive, sometimes negative, sometimes up, sometimes down, sometimes winning, sometimes losing, sometimes nice, sometimes mean, these are true. These are true statements that we can have certainty towards. So we don't have certainty. In other words, we have uncertainty in the extremes. We have certainty when we're balanced, okay? Really want that to sink in. So the message today is that we will have certainty in an uncertain market when we have realistic, balanced expectations on ourselves and on the markets, which we're going to get into in a second. And what this individual was trying to do in that car ride was just open my mind and realize that, you know, some of the beliefs and some of the ideas we hold dear to us, they're just not true. And I have seen this consistently with two of the most successful traders or investors that I know. They question all the beliefs and they don't take on common knowledge without really putting it under the microscope first And they're very contrarian in thinking relative to the herd, because a lot of the beliefs and ideas that people subscribe to, they don't. And they realize that there's always a level deeper than that, and there's a deeper understanding that we can have. We don't need to buy into a lot of the stuff that's out there, because a lot of the stuff that's out there isn't necessarily true. So make sure you're putting everything you receive under the microscope and really questioning the beliefs you hold. It's very important. Certainty appears when you're balanced. When you're balanced, realistic, two-sided expectations on yourself and on the market. Okay, for a very limited time only, I've opened up a free trial for the 12-week program. Now, this is my signature program that I have synthesized everything I've learned over the last 6.5 years in my own trading journey, in my studies of human behavior and psychology, working with hundreds of traders one-on-one and having thousands of traders come through my programs. This is the complete A to Z on trading mindset mastery. It's going to help you overcome your psychological challenges. It's going to help you get funded or continue to scale funding or continue to hold on to your funding. It's going to help you go off and accomplish great things in your trading and in your life. And then for a limited time only, I've opened up a free trial. So if you haven't been part of the 12-week program already, make sure you take advantage of this free trial. It's going to be a mind blower. I look forward to seeing you in there. Now, how can we apply this to the market? You can only have certainty when you're balanced in your expectation on the outcome of the market and on yourself as a trader. This is really, really important. I talk about this in detail in the 12-week program. I share that you can only have certainty when you're balanced on yourself, on your perception of yourself. You can have certainty that sometimes you're going to lose, sometimes you're going to win. But if you now put yourself a label on yourself that you always win as a trader, and you're always positive and you're always up at the end of the day as a trader, you're putting an unrealistic expectation on yourself. And I see a lot of traders are frustrated, they're beating themselves up, they're having these negative emotions as a feedback because they set unrealistic expectations of themselves as a trader. So it's important to recognize that as a trader, sometimes you're going to win, sometimes you're going to lose because of this probability sequence as a trader. But we can have certainty in ourselves as a trader when we realize that that's true. Sometimes we're going to win, sometimes we're going to lose. And losing is an essential part of our growth and our development as a trader. So too, on the market, on the outcome of the market, we can have an expectation, a realistic expectation that sometimes the market's going to go up, sometimes it's going to go down, sometimes we're going to win, sometimes we're going to lose. These are realistic, balanced expectations to have on the market and on ourselves that we can have certainty towards. So the question becomes, how can we risk manage and how can we put our processes in place now that we have these balanced, realistic expectations? How can we make sure our trading plan, our risk management protocols are in place to ensure that we succeed in the markets with these balanced, realistic expectations? That's really what the 12-week program is about. This is what I see the best traders do. And guess what? All these negative emotions, all this frustration, all this anger, all this resentment, all this judgment on yourself and on the market, it just disappears because now you have realistic expectations on yourself and on the market, and you give yourself permission to just execute on your trading plan, and lo and behold, your results start going through the roof and you start having consistent profitability because you're executing on your trading plan. You're not trying to change things, you're not judging good or bad, you're not fearful or greedy because you don't have these judgments. You just go to your processes and you have realistic expectations. This is, in my opinion, the keys to consistency. So the market could go up, I could win, or I could lose, but I don't necessarily care about the outcome on this individual trade. I know I will be profitable if I execute my edge over 1,000 trades. This is the balanced, realistic expectations that I see most consistent with the most successful traders. This is what they're thinking before they get into positions, and this is how they can have certainty in the market that over 1,000 trades they're going to be profitable because they have realistic expectations and because they just stick to executing on their edge. And on yourself, I will both win and lose as a trader. The outcome of the individual trade doesn't matter to me. What matters is focusing on my processes and executing on my edge. That's a very healthy expectation to have on yourself as a trader because it's true, it's realistic, it's balanced. Sometimes you're going to win, sometimes you're going to lose. But that doesn't matter. What matters is executing on your processes, executing on your edge, because ultimately that's what's going to yield you consistent profitability into the future. This is ultimately how you have certainty in yourself as a trader. This is ultimately how you have certainty in the market, that it will yield you income consistently. It's by having realistic expectations. Truly embodying, I want to emphasize that these expectations and beliefs will allow you to have certainty in the outcome of the market and have certainty in an uncertain probabilistic model. However, the big problem here is that most traders are addicted to the positive outcome. I want to win. I have to win on this individual trade, because if I don't, my ego gets hurt, my pride gets hurt. Okay? This is what stops traders from ultimately having consistent profitability. This is why you've probably heard me say that it's the addiction to the positive outcome, it's addiction to winning, that actually stops traders from having consistent profitability in the long term. Because consistent profitability means both winning and losing. But if we're addicted to winning, we're going to try and avoid the unavoidable, losing, and we're going to try and seek after the unattainable, winning all the time. We're going to have unrealistic expectations, we're going to get smacked by the market, and we're going to cycle into this negative feedback. So what's important is the realistic expectations. This is what the Bulletproof Your Mindset tool is all about. This is in a 12-week program. We cover how to actually go in there and neutralize the subconsciously stored data that's driving these expectations. It all comes together. My programs, they've all been put together to help you have consistent profitability by having balanced expectations, managing fear and greed in your psychology, having the tools to be able to neutralize these things and get back to your processes. This is what it's all about. Most people are hardwired subconsciously to have outcome-based expectations, addictions to winning. This is what I just mentioned before. We have in our mind subconsciously stored data of this is good, this is bad, that drives our unrealistic expectations. If that's not neutralized, it's very difficult to have balanced, realistic expectations. And this is ultimately where you want to come into the 12-week program, learn the tools and teachings I have there. I've got the actual tools with the application, the walkthroughs and the accountability to ensure you go through and address what needs to be addressed in your mind, address what needs to be addressed in your mind, so you can have balanced, realistic expectations and just stick to your trading plan, free from the shackles of fear and greed. And most traders cannot embody the expectations or beliefs that we've talked about in this trading psychology lecture necessary to be a successful trader, because they don't have the tools that I teach to address the hardwired, subconsciously stored baggage, which can be addressed. We do it, every program in the 12-week program. So the 12-week trading mindset transformation program, if you know you're having these challenges, you struggle to embody these beliefs that I talk about, that's where you want to be. It's a very profound program. We see huge shifts every time we do that exercise. Okay, so if this particular lecture resonated with you, make sure you get the Bulletproof Your Mindset tool. That's a tool that's going to help you apply the proper expectations before you take trades. But if you know there's something deeper there and you still struggle and you're still pulled by greed and trying to avoid fear in the markets, and you know those emotions are still running you, the 12-week program is where it's at, because I teach you the actual tools to go back to your most painful losses, your most pleasurable wins, and address those, because that's ultimately what's driving your unrealistic expectation in the present moment. So make sure you check out the tools and the programs I have. They will be extremely useful as a trader to help overcome the psychological challenges you have and to help you get funding or scale your funding. Now, a bit of a summary of today's lecture. First and foremost, uncertainty comes from having unrealistic expectations in the outcome. All positive, no negative. All win, no loss. These extreme one-sided expectations are what lead to uncertainty in the market. Having balanced expectations in yourself and on the markets, what leads to certainty and also what leads to consistent profitability. Focus on the process of executing your edge over a large sample space. That's what it's all about. And the way you get to that is by having balanced expectations on the outcome, because that frees you up from the fear and greed, and it gives you permission to just focus on executing on your trading plan.